What's up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And we are here today on this wonderful Friday to report what's going on in the market, to talk about the elephant in the middle of the room most of the YouTubers are not talking about. Now, we have had a few of them that are reporting about the slide, but it's kind of like for the past several weeks, most of people are giving us this idea that the market is about to explode. It was about to move up, or we've got this monumental indicator that shows us that 42K is the absolute bottom and we don't see it going any lower. And maybe 41 is the most extreme case, but it's just highly unlikely that Bitcoin will go below that amount because, well, institutional adoption is going on and, well, innovation is there and the fundamental strength and, well, my goodness, crypto is the future of the world and the fiat currency is crashing right now before our eyes, and Chile has adopted and Brazil has adopted and all these countries are adopting Bitcoin. So it's going to go up, 99% chance of going up and not dipping down. And then we have this dump occur. How many times do we see this happen in the past where everyone is overly bullish and giving all of this crazy advice and predictions saying that you should jump on their Bybit links and leverage Bitcoin and use 10x leverage because things are about to blow up? And then we see this happen. How many people are out there that have lost tons of money fooling around with leverage because they bet the wrong direction after this happened? And we see that we have been in this support resistance zone for quite some time. This is on the 4-hour chart. This is the Bitcoin 4-hour chart. Here is this major support resistance zone that I've been talking about since January. Let's see here. What was the date? When we entered into the zone was January the 5th. And then we stayed in here, we poked our head out, and this is when everybody said that we were absolutely going to blow off to the moon. But indications on the one-day chart were not saying the same, and in fact, at this point, we can see that the stochastic was peaked, and we had this little bitty correction here when stochastic went down to oversold, but then we started to come up, and when the next stochastic peak hit, we were still stuck here at the top of the support resistance zone. And then we bottomed out, and we came all the way back up to the top here, and each time we had a peak, we're not getting any return on that investment, any return on that movement with each stochastic peak, and then we finally fell off. So we fooled around in this zone long enough, testing the limits, testing the limits, testing the limits, and then we failed. And then right here on January the 21st, we fell out of the bottom of this zone. So immediately thereafter, I started to think that there were possibilities that we could look for the next support resistance zone, this one right here. And I said that 38,711 was a possibility. And sure enough, we snapped right down to that volume node. And then the red flag in my mind was that if we went to the bottom of this channel, it's a thin one. And if we don't hold it, there's a slip zone here because there's no volume nodes here that show that anytime within the recent past that there is a popular amount, popular price of trading volume that would hold us here. And then what do? We fell, and now we're in the last one. We're in the bottom one. Okay, and notice that we are at the bottom of the bottom support resistance zone. Here's the word of warning for the market. There is another crossover here where it looked like the stochastic on the 4-hour was bottomed out right there. We had a crossover. It went up, but then notice what the blue line did. The blue fast line, the %K, went from here down to here. It gave up. Not so soon after the crossover happened, and boom, it failed and went the other way. And then when you look downstairs in the MACD, it is very, very ugly. Okay, I need to adjust this the height of this window here because I don't have all of the. There we go. Now we've got the MACD into the window. And now you can see how ugly this dip is on the MACD as the oscillators have completely diverged. Here's the slow line. Here's the fast line. Look at the gap in between. That says that this momentum is very strong downward. Okay? Whew. And when you see the histogram doing this, where we're just printing big, fat, humongous red bars on the histogram, we don't know how far down that it's going to go. So you might think, well, it's at the bottom here. Well, don't think so fast there, Skippy, because when we scrunch this in and we look at prior movements, look how low the MACD went on this dip right here. Bam, all the way down there below the 2,000. And that's not all. Okay, when we scrunch further in here, there's another one back here that went farther than that. Here's one of them. This one dipped all the way down to the negative 2,700 line. And there's another one before that that shows proof. I thought there was one that went down to closer to negative 5,000. But maybe that's on the one-day chart. But at any rate, this might not be the bottom, because look how far down we made it here when this oscillator dipped all the way here to negative 2,200. All right. Now, we don't know if it's going to continue down or if we're going to recover. We could bounce at the bottom of this support resistance zone right here. Okay, so we could finish this off because it did wick back up and it could shoot back up from there. And then again, it might not. And the two pieces of evidence that it might not are here and here. But it's all probabilities. It's looking like the highest probability right now is that it's going down farther. But that doesn't mean that some whale can't come in and force this thing up. But if they're wanting to get it at a cheaper price, the indicators are saying that we can go lower. All right, now let's just jump to the, let's go to the 1 day. Let me pull this down here and jump to the 1 day chart. Whoops, turns drawing mode off. Here we go. Jump into the 1 day chart and we can really see things. Let me put myself down here. We'll scrunch this down just a little bit, and this is going to give us even more information on the VPVR. Whoo, wow, check this out. Oh my. All right, so here we are at the bottom of this zone. We might have to bring this one down here. This is the worst case zone that goes and bottoms out at like 31,000. So we'll have to see if we fail this one. I need to extend this one down so we know where the brakes could possibly be put on, which is still in the thick of this volume node here on the VPVR. So it could be anywhere between, in that area right there. Let's make a rectangle, as a matter of fact. This is a very popular, that's not a rectangle. Dang it, clicking the wrong buttons here. This is a very popular price range right there. Okay, so we're sitting at the top of it right now, right here, and it could go as low as here. That would coincide with this previous level of support and resistance. Now, what are the indicators saying? This is all we have to go by for now, and it's not saying that this is the way that it's going to be, because I'm not trying to crystal ball this. I'm just looking at what's in front of us, okay? It can do either way. You just look at the probabilities and what the indicators are saying of what we have to go by right now. Right now, you see this nasty crossover that happened, and the fast line is down here and the slow line is up here. They're very divergent. You see that the crossover happened after a double hump top where we got a fake out twice. It looked like we were going to continue up, and it went back down, then up, and then back down, and now is the falling off the cliff part. Looking down here on the MACD, we see a crossover right there. It's just the point of crossing over right now, just beyond it on the 1 day chart with the 1 day candles, which says that this could continue way down. We don't know. We really don't know. Now let's scrunch this in a little bit. Here we go, because we can't see all of the extent of the peaks and the troughs on the 1 day for the MACD. All right, now let's look at it. Let's look at previous history. This dip right here, There it is, right there on the 1 day. That's what I was talking about before, where the MACD oscillators dipped down nearly to negative 5,000. All right. So you see that what happens on these extreme peaks and valleys on the MACD. Here's an extreme peak, and that coincides with this peak here. Here's the next peak. It coincides with this one, where we got rejected in the topmost support resistance zone. And notice how price was going up after this. You see this? An all-time high there, or not all-time high, second all-time high, while the MACD was going down. And that's what you call a divergence. And while this continues to go down and price is going up, that was telling you that, hey, folks, there's going to be a reversal up here, okay? Because they were going in opposite directions. Then we had the all-time bottom at the negative 5,000, which coincides to the zigzag area here, okay, in that whole zone that ended up bottoming out here while the MACD oscillators are trying to make it back up, okay? So then we had a divergence where MACD was moving up and price was moving down in this area, and that says, hey, folks, a reversal is coming, and then there's the reversal right there. And then we had MACD oscillators in congruence with price movement. And then from that point, they stay in touch with each other, where we peaked out here, we came down here. Here's a bottom. And then on that next top right there, that coincided with this, and then it gave one more push as the MACD was going down, and we had the all-time high and got rejected at the top of this parallel trading channel that I drew out a few weeks before. There it is right there. And we have just violated the bottom limit of this parallel trading zone, which says, we got further down to go. Now, let's look at the VPVR. All right. What is it trying to tell us now that we've seen what the stochastic and the MACD have to say? Good Lord, we're about to hit a slip zone. Okay, so what I mean by that is that we can slip down further because there's not much popular trading volume that happens below this level right here. Okay, boom, up until that point. I meant to make that a line. I'm not very good at clicking today. Here's the line of demarcation, because after this, you can see that the volume per price, which is what the VPVR, it tails off to nothing. And I call this the slip zone. So if we fail the bottom of this, we can hit this price right here. So target right there. That is a target. 33,000 is a possibility if we fail this. If we fail the limit here at like 35, somewhere in there, 35 I think is what it is, then the next possibility is 33. And if we fail this volume node, then we test the bottom of the bottom support resistance zone, which is 32. If we don't hold 32, then that's when you can start talking in the 20,000 range. And I know people are in denial about that and say, oh, it can't ever happen. Well, sure it can. Sure it can. When these indicators are looking like this, and when we got that slip zone hanging out there, it's possible. Not saying that it will happen. So what do? The smart person, what is the smart person going to do? Just small buys, DCA, not financial advice, by the way, entertainment purposes only. But DCA, instead of aping in at any point when you don't know really which way it's going to go. So if you get small amounts while it's dipping down, overall, in time, it all comes out in the wash. Now, looking at the 1 week, this is pretty ugly. But on the 1 week, it could be saying that, okay, we're close to the bottom of the movement on the stochastic. We have just entered oversold zone, and momentum on price is clearly down like that. And then we've got the crossover that has already happened on the MACD right here, and we have the divergence of the fast and slow line printing histogram bars in the negative here. Okay, and so what's going to happen is this whole movement is going to have to complete. So this is going to have to do something like this, and then we get a reversal where the overall movement of the MACD oscillators is climbing upwards instead of falling downwards. Okay, there's your overall movement right there. So we don't know how much time that it's going to take for this to complete. But let's say we could be running into February or, March, maybe March, April, something like that. You never know. At least a couple months that on worst case scenario before a bottom is hit. It could be anywhere from today to March before a bottom hits. That's what it's looking like. That's my best educated guess. Dang it, drawing mode, pencil. So, something like that could happen. All right. And it is also a possibility that, you could jump down here before you gather yourself and start to move up. But it doesn't make any difference. Just DCA and enjoy the ride. Crypto ain't going anywhere. The last thing I'll say is something I mentioned in the group is that people don't consider the effect of the devaluing of the dollar on the crypto market price. How much of this dip is just because the dollar is losing value? Your dollar doesn't buy the cheeseburger on the dollar meal menu anymore. Okay, so that $1 cheeseburger is now like $1.39. Okay, the dollar store, they're having to charge $1, $20, $30 something because the dollar's not worth $1 anymore. So, what if perhaps we're not really in this big slide, but things are really more moving like this because we're losing the strength of the dollar because the US dollar is the measurement of the Bitcoin price because the US dollar is the base currency of the world. Think about that for a while. How can you devalue the dollar and not see this? So is this really that big of bad news? Does it really mean that the world is going to end? No, it doesn't. If you double the money supply, sure, Bitcoin could go from 40,000 to 20,000. So if the dollar goes from being worth $1 to 50 cents, and that means that Bitcoin is now at 20,000, is that bad news? No, because you still have the same buying power. Well, anyway, that's all I have. I didn't want to make this too long, but just to put some sense into some of the craziness and tell you what I see from an unbiased perspective. And we'll end on this 4-hour chart and just have some fun and see how it does in this last support resistance zone. Post your comments below and let me know what your thoughts are if we've reached the bottom, if you think we're going to plow out of this and zoom back on up and resume the bull market, or if you think that we have further capitulation movement action to go. I would love to hear about it. My name is Carlton Flowers, and I am out. Like and subscribe if you haven't already. We'll see you.